Hey, thanks for making it to Veterans Info Tap. I am here with David. He has been a continued guest and will continue. Thank you so much for making it, David. I'm going to lead us into this conversation because I have a very good question that I think you have heard more than once, and I'd love for you to dive in on it. Now, before we jump into it, hit the thumbs up, subscribe, share with a friend, all that good stuff. And also check out David's YouTube channel. I'll let him plug that, and we'll drop it in the description and in the comments as well. So the question for you, David, is, look, I'd love to be a homeowner. I would love it, right? But man, how much money do I really need to save up? Because it seems like it's just this impossible goal for me.
No,
Go.
Jason, thanks for having me on. And yeah, the YouTube channel is VA Housing Education. Make sure you guys hit the like, subscribe button on that because it's all around housing and how veterans can actually position themselves to be homeowners. And this is a relevant topic because we get questions all the time, right? Yes, the benefit of the VA loan is amazing. 100% financing, no private mortgage insurance. We can go on for like an hour of all the benefits with it. So using it is a thumbs up. Like, yes, you need to use it. Other loan products, but saving money for closing costs. And sometimes for veterans, it does make sense to do a down payment. In fact, Jason, the VA in a way encourages veterans to do a down payment because if you don't have a service-connected disability, you pay what's called a VA funding fee. Now, that funding fee gets reduced the more money you put down. So if you put no money down, you have one fee, 5% down, another fee. And then if you put 10% down or more, it's a different fee because the VA encourages you to do that. And I also encourage you to do that if that's an option, especially if you're buying and selling homes, because then you're getting, hopefully you have equity out of the property to put down on the second home. When it comes to understanding closing costs, now closing costs on a home purchase, and I know just you have some experience in this, it does vary across the country and who you work with. And with the National Association of Realtor lawsuit changes, that also now plays a game. So typically we say that on average, it's about 3%-ish of a purchase price for closing costs. Okay. So if you're buying, $500,000 place, it's safe to say that closing costs, including like taxes, insurance, all of that fun stuff that goes with home ownership, is about $15,000. Right now, there's ways that you can do it, which we can go over, but that's the first part that goes into home ownership. And obviously, there's other things like you have to get movers, especially if you're not a young buck. Like I got a bad back, I'm not moving myself. I'll tell you that. You have that piece. Plus, you have, if you haven't owned a home before, you have home maintenance you have to kind of think about, right? You need tools. I'm still going through that process year into it. Still, don't even want to look at my Home Depot credit card bill because there's just things that you need to buy to have around the house. And for a lot of veterans too, Jason, they want to own big pieces of land, right? Once you get to a certain acreage, like you need a tractor, you need a zero turn or whatever, like all that stuff adds up in that home ownership piece.
Yeah, that's a great point. Is all the kind of aftermath of owning the home, right? And if you're married, your spouse might not like that your old couch in the new house, right? So you also have to think about buying a bunch of new things for that new place that you bought. One of the things that I was thinking about, and I'm not sure how often you see this, and I'd love to get your thought on it. Plenty of veterans out there file their claims either for the first time ever, and then it takes a year or what have you to go through the process. Ideally, they put in an intent to file, bought themselves some extra time, or they're filing for increases, whatever it is, and they end up getting a nice chunk for back pay, right? So they get that back pay check from the VA of $15,000, $20,000, $30,000 in some cases, even higher in some cases. How does the bank look at that coming in, that extra money? Is there any sort of weird documentation? Because the VA doesn't send you like a receipt, really. I mean, I guess they kind of do. They send you in your award letter. But what kind of stuff would somebody need? I mean, obviously, I think, David, that you using your back pay to purchase a home is probably the smartest thing you can do,
Right.
instead of going, yay, I got 30 grand. I'm going to go out and buy these other things. So I'd
Like
like
a
to just,
car.
yes, or
Yes.
motorcycle or
Motorcycles, boats.
yeah,
Yeah,
boats.
all that
Boats are
stuff.
a good one. Yeah, good
Yeah.
call.
Remember,
Rent
people, better
the
to have
boat.
friends with boats than have a
Yeah,
boat yourself. Just
yeah,
remember
yeah.
that.
But what is that saying? There's the two happiest times for a boat owner are the day they bought it and the day they sold it, right?
Yeah.
So, uh,
100% on that. Yeah,
so let me know. Let me know your thoughts.
yeah, so there's a couple of the schools of thought on this. One, I'm in 100% agreement with you that getting that back pay opens up disability. The highest back pay, by the way, that I have ever seen, 650,000. Highest back pay I've ever seen. I think that he was going through like the process for over
Niemer.
15 years,
Yeah,
going back
there's
and
probably a
forth.
Niemer claim. He's probably like a Vietnam era vet.
Yeah, like it took a long time to get it, and they kept refiling, which that blew my mind. But this, but regardless, like this veteran, they basically did what they paid off their debt that they had because they were unemployed for a while. They put a small down payment on the property because they can afford it with their current situation. And they took that cash they had and invested it so they can make more money. It was just kind of a win-win situation, but not everyone is in that specific situation, right? So looking at your finances, let's say if you get a back pay for $40,000, $50,000, you have $10,000 in debt. Hey, that might be a good idea to pay that off because it does a couple things. One, it frees up your monthly cash flow, which is important. And two, it improves your credit because credit is really going to be the driver for getting the best financial terms you can get. Doing a down payment on a VA loan is almost a moot point for the general person. It can be a benefit if your financial situation is tight. Sometimes the VA we have like an automated approval system. This is going to get boring if I go down this route and confusing, but there's ways that you could make basically a VA loan will accept it if you do a down payment, but that's not the general part, right? In general, it's a tool that you can use. Not only that, is that money, like you said, a good point on verifying it. So that award letter will be one piece to verify you got that money. And then the other one is when you go on va.gov, you go to your payment history. You can actually print that for the lender to be able to use it. And another big benefit of you getting your disability award is you can use that income immediately the day or the second that you get that letter. Now you can use that income. But a couple things happen. One, you need to update your certificate of eligibility through the VA, and I can do that for you. You could schedule a consultation with us. We'll do that, right? You don't have to pay us anything. We'll just go to the VA and get that updated for you because it is important because it needs to reflect correctly. That income is used right away, so now you can qualify for potentially more. Now, I'm not saying that you should because we've talked about this before. Is that hey, if my disability is at 100% and I collect 37 or whatever it is, do I keep my expenses below that in the event something happens? I'm not put in a bad position, right? Hey, my mortgage payment's 2,500, my car is 500, and I have 1,000 living. Okay, now things make sense, right? But again, everyone's situation is different because you might be having a full-time job plus your disability, so kind of have to craft it how you want it to lay out.
Right. Yeah, no, that makes sense. And the one thing you touched on there for a second was seasoning requirements. So
Yep.
For those out there that are listening and watching, the fact that it's coming from the VA and you can document where it came from and that it was due to your disability, it eliminates the need for any sort of seasoning requirements. Otherwise, what has to happen, correct me if I'm wrong, David, if there's a big bulk of money that just shows up in your account from, I don't know where that showed up, they want you to wait for a little while to make sure, and usually it's like a couple months, right? Couple months seasoning requirement.
Yeah, so a good point on this. So if they see it and then basically it's too late. Like once they see this large deposit that you can't explain. And this does actually, I want to touch on this because this does happen to veterans, okay? This seasoning requirement Jason is talking about is that lenders look at the last 2 months of bank statements. So both incoming money and outgoing money can affect you, right? Because let's say you deposited, $100,000 in cash in your account today, and you try to go buy a house. Well, they're gonna be like, "Well, what's this $100,000? We can't use any of this money because it hasn't been seasoned for 2 months, right? And it's also probably some red flags in banking you're going to get into, right? So there's going to be you might have some other problems, but I understand why people love cash, and there's veterans out there that don't use credit, and I get it, right? So I've actually even had people get paid in cash for a W-2 job, which is something I've never seen before. So, obviously seeing more and more kind of the more we do, but it's an interesting fact because you still want to be able to have a depository account. So they're looking at the last 2 months. So anything prior to that 2 months, the lender's not looking at your bank statements to see where that's coming from, right? So that's just a general VA rule that they have. And then the opposite is that if you have reoccurring debt showing up on your monthly statements, but it's not on your credit report, they may hit you with that. So typically, that's how people get caught with timeshares. They're like, hey, it's not on your credit report, but you're paying this timeshare. Now we have to count it against you. Another one that's sneaky with the VA loan is if you have childcare expenses, they actually count against you for qualifying purposes, which that's the only loan program that I know of that does that.
Right. That's a great point. So I'm going to say this as high level as I can. Be cognizant of your bank statements. Be aware of what's going in and going out, and have a conversation and set yourself up for success when you're moving forward. The best thing you could possibly do is reach out to David. And again, VA Housing Education, he puts out great information on there. Look, home loans are not something you do every day. Okay. For many of you, you might not need it today, but guess what? You might need it in the future, whether you're refinancing, potentially purchasing another home, or you're going to share this information with somebody you know. So check him out, subscribe there, so at least it stays in your awareness for when you do need it. David, I was going to say, I hate to shift gears on you and throw a wrench in this, but I'm kind of excited about it, actually.
I'm used to it by now, Jason.
Yeah, I know, right? So I know but I want to set the stage for the folks here, and then I'm going to kick it to you for your expertise. So several years ago during COVID, there was a COVID forbearance program for people with a VA home loan. People with a VA home loan were taking advantage of this essentially, and I'm just going to this is just the setting the stage part. You could go basically up to about 18 months of mortgage, not really forgiveness, but you're not going to make your mortgage payment, and then they'll apply it to the end of the loan. Right. Various lenders out there, whatever. And for the people who took advantage of that up front, sure, they were taken care of. However, partway through that program, the VA pulled the rug with no safety net which just blows my mind from a leadership level, David, and you can chime in on that all you want as well. So it blows my mind that happened. Now, here's the piece where you come in. Besides me hearing what you want to say about that, is some people that had this happened, actually everybody, they had a choice now. I could let my house foreclose. I can go dig up all of my missed payments, $20,000, which I didn't save because I didn't have a job during that time frame, so that's impossible. Mm-hmm. Or 3, which is, hey, if you want to keep your house, you're just going to have to modify out of your 2.5% interest rate, by the way, and jump over here to this current 6.5% rate. And this was, a year ago or what have you, or yep. 6 months ago, 8 months ago. What do you say to these people who are stuck in these modified loans now at a higher rate than that probably at the highest rates have been, to be honest with you, over the past decade or more? I mean, if you go back 8 months, that was probably around the time they're the highest. So 2 things for you, David. 1, what are your thoughts about the calamity regarding that? And then 2, you're talking to those people that modified their loans. What's your message to them?
Yeah, and I'm with you, Jason. Yeah, that was part of like the CARES Act forbearance program that they had, which they did recognize that they totally botched that piece to it. And there's a lot of veterans that are affected by it, and I believe it's over 45,000 veterans are in this foreclosure kind of weird modification. And the thing is that what happened is a lot of people didn't actually were able to refinance into those lower interest rates because they went into those loan modification programs, which that's why another piece to this as a whole is you really should understand how an interest rate reduction refinance loan is, because that could have helped save a lot of people, right? And to be able
Oh,
to
wow.
refinance into the
No
lower program.
kidding.
Yeah, because even with a 10% disability rating, you can do it because you do an appraisal waiver. It's almost like an income waiver. They just need to verify it. So
Wow.
that's why it's important to know that program so you don't put yourself in a position. Now, what happens and where are we now with this CARES Act piece? So the VA came out a couple months ago, and there's like I still don't understand what's going on with the program, because the VA basically came out and said they're going to buy back those mortgages from the lenders. After they buy them back, they're going to modify them to a certain interest rate, and then they're going to give you a 30-year, I think maybe potentially a 40-year
What do
mortgage
you
on
have?
there. Yeah, so then basically you can kind of put yourself in a better position and then keep that home. Now, where are we at with it even today? I don't know, because people still comment on the video I did about it a couple months ago. They're like, yeah, great information, but the VA is not giving us anything additional. So just kind of keep that in mind. And you can always, if you have time on your hands, reach out to the VA and ask them what is going on with it. Write to your Congress, write to your local government, so they reach out and put pressure to get answers on what's going on. Um, Now, in this limbo stage too, is that I don't think people could even make mortgage payments if you're already this late into the process. Either like you have to pay the whole thing up front, or
Yep.
like nothing happens, right?
Mhm.
So one part is, if you're in this position, save money and you're back working, save as much money as possible, right? If you walk away right now from your property and it goes to foreclosure, keep in mind that you do lose that portion of your VA home loan benefits. And a lot of people are in this position. Do I stay or do I leave? Right? This is my personal opinion on this, is that I would say stay in the property. And I just actually talked to somebody about this. Stay in the property. Again, this is my opinion. Like, don't do it for deed in lieu, where you basically sign over the paperwork to the lender, because again, you lose your benefits. Short sale, you lock out a portion of your benefits. Today's market, you should be able to sell it so you don't go into any additional further debt, or you losing your VA home loan, because you should have equity in your property, right? So at least you can get your benefits back. Your credit, yeah, that's going to take a hot minute to recover, but that's fine. That is recoverable. If you lose your benefits and you don't have the money to pay it back, then you lose that portion of your benefits. So it's important to understand it. And then um yeah, definitely the deed and lose. Like, you just basically
Right.
sign over the paperwork and lose your benefits. But a lot of veterans are in a position that if I were to move somewhere else, the rent is more now than my modification would be, and at least
Right.
I own the property.
Right. Yeah, yeah. So, my understanding on the VA program that they supposedly had rolled out,
Yeah.
which is the Veterans Affairs Servicing Purchase
Yep.
Program,
That's the one.
that it's very narrowly focused on only those that are currently in foreclosure. If
Yeah.
you've already modified your loan, you have a new loan, and yeah, sure, it could be at a 6.5%, and it could be because of all these things, but you've already modified out. You're no longer in foreclosure, and so they're not going to help you, is what I understand. Do I think that's right? No, I think I would reach out to my congressional member and let them know that, look, because of no fault of my own, really, because I signed up for a program that was supposed to be there for me, I'm now stuck with this, and I think that they should figure out a way to make it right for those vets. Now, for
Agreed.
those that have modified their loan, okay, I've now done a loan modification. I have a new loan with a new interest rate, and now my payments are $700-800 more than what they were. Should they be reaching out to let's say you, David, and saying, hey, does it make sense for me to refinance now? And oh, by the way, if they did a loan modification, chances are it's no longer a VA loan, or is it still a VA loan because they just modified the actual loan? I don't know. I've never had to do that. So I'm not sure if it's still considered a VA loan and they just modified it, or if they modified them out of a VA loan. Either way, there's two different options where
Yeah.
people could be contacting you and potentially get a lower interest rate today than what they had 6 months ago, 8 months ago.
Yeah, that's a great question. So one piece to this is that we've actually come across this not too long ago, where a veteran did a loan modification. Now, that program is still a VA loan, it's just a VA loan modification. So that's something, and you have to make typically a certain amount of payments on that modification that before you can actually qualify for a refinance. So typically, and it's going to be based on lenders, 6 to 12 months of payments on your loan modification will help you qualify for doing a refinance. But like, again, that's going to be very circumstantial to your situation. Really, if you are at like a 6.75 or 7% or higher, then definitely reach out. If you're below that, just kind of like, talking loose terms and from educational purposes, then you probably want to, reach out. If you have it lower than that, we're in a good spot right now, but monitor the rates because right now the economy is shifting at a crazy pace, especially since we're after the election. We just kind of see a lot of turmoil going on. So keep checking that. And then, feel free to reach out and always happy to at least walk you through your situation so you know where you stand.
Absolutely. And hey, David, before we wrap it up, because I know I only got you for a couple more minutes here, can you let the viewers know what sort of information that they'll get from you on your channel? What sort of things you talk about? Obviously, it's mortgage, but just give kind of like, a few different categories. Maybe, I don't know if you have maybe a newsletter or anything that goes out from anywhere, anything like that that you want to share with them before we wrap it up.
Yeah, definitely. So on the channel itself, we focus on a couple things. The pre-purchase, hey, what is it that you need to know that leads up to being home ownership? Like videos like this, right? Hey, planning, budgeting, savings, all that fun stuff. Then we do videos on, hey, I'm going through the process. What do I need to know and be aware of? Because that's where we get a lot of phone calls for veterans calling and saying, hey, my lender screwed up. Can I get your help? Right. And then we do videos on home ownership. Is that what happens after you buy a home? What happens if I want to sell a property? So we do a lot of that on the channel itself. And then we'll be shifting a little bit this coming year into recent trends. So you know what's going on in real estate in real time, right? Because I think it's important, right? You have the life cycle of home ownership from start to finish. And then what's going on? Because you're always interested. Was my home value going up? Is it going down? Like, why my cousin Bobby bought a house, I can't buy a house, right? So
Right.
all that is connected together. And then if you guys want to check out vahousingeducation.com, there you can schedule an appointment with us, kind of get some general info. But really, everyone's financial situation is different, right? Everyone is a snowflake. You're unique, right? No matter how similar you think you are, it's
Mhm.
going to be different. And you can reach out, we'll help people with buying, purchasing a property using their benefits, refinancing. And if it's something we don't do, we'll refer them to somebody that actually knows what they're doing in the specific product line. That just helps the veteran community as a whole. And also people will reach out for consultations to say, hey, David, I had someone reach out about the foreclosure. They're going through it, and the lender asked them a couple options, and we kind of went through it because a lot of times they don't break it down in plain English.
Right.
I mean, I could, they just kind of make it like, hey, let's do this really quick, like a used car salesman, because they want to do what's best for them. So they can also reach out for that to at least, schedule like 15-minute call and go through it.
That's outstanding. Thank you, David. For those that don't know, David is a veteran as well, and I believe you're still currently serving in the reserve
Right.
components,
Yep.
right? So, for those that don't know, now you know. And I will tell you this: David is the subject matter expert. Not all lenders are created equal. Some are very focused on different segments of lending. Lending is a vast world, and if you're looking at VA stuff, you want to talk to a subject matter expert, and that is this guy. Thank you so much for being on with us, David. I really appreciate your service to the community, both in and out of uniform. Thank you so much. With that, we'll go ahead and end it there. Thank you for watching. I appreciate you. Have a great one, and remember, if we don't take care of each other, something went wrong.